what usually gives a good buy indication: low PE ratio, high dividend yield, high revenue growth, with basically no dilution. Here we have Kaspi. Kaspi operates as a payment platform, fintech, and marketplace in Kazakhstan. Now is the question, why is this company so cheap, and is this revenue growth gonna continue? First of all, the company is made out of 3 parts: the payments platform, the marketplace, and the fintech. And as you can see, the marketplace is the fastest growing. Q4 numbers are not out yet, but they aim for 25% year over year, and last quarter it looked fairly good for that, because they're still fastly growing marketplace. Here they still are greatly expanding e-groceries, vacation packages, so they basically do what all these marketplace companies do: try to consolidate market share around them, go into different areas. They're playing a lot like Alibaba, like Mercado Libre. If you compare Mercado Libre to Kaspi, they basically have the exact same positions, other than Mercado Libre is also heavily invested in logistics. One good thing they have in the e-commerce sector is that they have a very low take rate there. They only have a take rate of around 11%. I think they still have a good runway there to increase it once the growth ebbs out. They're basically a monopoly in Kazakhstan. I think they're gonna very easily do that. What is their fintech? Loans. They're mostly small loans, they're not big loans. You have to invest a lot of money in that loan portfolio. The equity is mostly going into the loans. These are the receivables. This is their loan portion. Around half of the earnings are paid out, a bit more, and the rest goes straight into the loan portfolio. That is a part of a business which eats up a lot of money, but as long as most of the loan gets repaid, it's basically free money. 2.3% delinquency rate, that is not very high, I would say. Other companies have way higher ones, so their loan portfolio is well managed. Now, why is Kaspi so successful? There is no competitor in Kazakhstan against them. 60% of Kazakhstani adults use this company. 60% is a penetration ratio that not even Amazon can reach. Amazon gets 40% in the US. 60% is a crazy ratio for a country to use a platform. But then there's an issue there. If 60% of your people already use your company, where's your growth rate gonna come from? Because this growth rate cannot be sustained even if the economy grows and the people use your platform more. You do not get 40% revenue growth without increasing your penetration rate. And that is one of the reasons why this company is so cheap. Kazakhstan has a population of around 20 million. And if anything happens to the Kazakhstani economy, this revenue growth is gone. They're using the Kazakhstani tenge, because all of the revenue comes from Kazakhstan in Kazakhstani tenge. As you can see, since 2010, this currency has not performed well. Now yes, since 2016 it's only declined by 28%, while the revenue has kinda gone from nothing to everything, so currently it does not matter. But you gotta know, Kazakhstan doesn't have the most stable currency, it's a heavily resource-reliant economy, and when we look what they export, it's basically only raw goods. And what happens to economies which are mainly based on raw goods, like oil, like gas, copper, all of that, if that hits, the currency goes down. And that is, I think, the main reason why this company is so cheap. And when we look in their guidance, we can see payments, still 20% growth, fintech as well. These are the more mature parts of the business. Marketplace, still growing fairly fast, but this one is eventually gonna slow down. The marketplace still as well. And what is their solution to this? Hepsi Burada. It's an acquisition they made in Turkey. They're trying to enter the Turkish market now, which is way bigger, over 80 million people, 4 times the amount of Kazakhstan, way bigger economy. They're not a monopoly there. They do not have the same moat they have in Kazakhstan. You're going from a country with a very weak currency, a very unstable economy, into an economy which currency has declined for decades and decades. Let's say the tenge would have performed the same as the lira since 2016. 91% decline. That's all the USD revenue gone. I don't really like this acquisition. I think they should enter other markets. They say yes, they have similar culture, similar business. It's gonna be easier for them to enter there than other markets. But overall, I see this as a poor choice of market. Maybe I'm gonna eat my words. Maybe it's gonna go very well. Maybe the Turkish lira is gonna stabilize. But I don't like this play. But in exchange, you have this very low PE ratio of 10. And you get a 6.7% dividend yield. So I would say it's not a horrible buy. Even if revenue is gonna go only 20% from now on. And the tenge declines 10% per year, which is very unusual, didn't happen lately. That is still 10% earnings per share growth in USD. That plus the nearly 7% dividend is still a 17% reward. Not bad at all. Now we're gonna go later into how much I would pay for Kaspi, but right now I wouldn't really buy it. Why? I own Mercado Libre. Way more expensive in terms of PE ratio, not when you look at it in free cash flow ratio. It has its moat in South America. Has way more stable economies. and has logistics, because Kaspi's logistics are not as big as Mercado Libre, even compared to their home country. Currently their earnings per share is $10. They penetrated most of the Kazakhstani market. Yes, their marketplace is still growing at 45%, but their payment and fintech are already growing only in quotation marks at 20%. I think that's gonna slow down even more. So to be conservative, especially if you account for any depreciations in the currency, I'm gonna go with 20% for the next 5 years. Slow down to 15% after that. Now, what does this not include? The Turkish acquisition becoming big. I don't really count on that. It seems like a very risky move. But what if it goes better? The underlying business just stays faster growing. Maybe the Turkey acquisition works out. $500 per share. As we can see, there's already a 147% upside. So this would be a great buy under these assumptions. 75% payout ratio will have a reduction due to taxes. Now what if it goes bad? Maybe 15% growth only, 5% yearly depreciation in the tenge, slow down after that, only 8 multiple. Well then, even we make 10%. This might be a buy if you want to invest in that kind of market, or if you do not have anything like that. I already have Mercado Libre. I do not know if I'm gonna invest in Kaspi. If the Kazakhstani economy goes bye-bye, the currency can easily crash 50%. It did that before. And that is 50% of the earnings gone right there. If it gets sanctioned, you do not know what happens to these shares. Currently, Kazakhstan is still neutral between Russia and the West, but Russia already threatened the country before. So this is a highly unstable market with a lot of risk, but in exchange you have this very high upside. This is an extremely high risk, extremely high reward situation. So what do you think about it? Write down below. Have a good day.